In this tutorial, I'm going to introduce you to the Advanced Monthly Financial Model here at starterfinancialmodel.com. This is a fully integrated financial model that builds financial projections over a 5-year period. So looking at the tabs here, you can see that there is an Assumptions tab. And the data from this tab establishes a foundation for the remaining revenue and expense drivers, which can be found on the blue colored tabs here. So there are 3 scenarios that you can use for this model: the normal or base scenario, a slightly optimistic scenario, and a slightly pessimistic scenario. Ideally, all 3 should be filled out so that you can prepare for best and worst case situations. So the goal is that you're not just guessing as to what your revenue and costs will be. Instead, you are generating assumptions that build revenue and cost drivers. The key here is that these assumptions can be tested and tweaked at any time. They are not just wild forecasts. So the light green cells here take inputs. And in this example, we'll be building a model for a service-based company operating only on the internet. Keep in mind, though, that this model can be used for a service, subscription, manufacturing product, or even a brick-and-mortar company. And the assumptions here are broken into 3 sections. We have the revenue assumptions, cost assumptions, and then we have a few other assumptions here. And you can see on the revenue assumptions, if you scroll down, we have the different scenarios: the normal scenario, the optimistic scenario, and then finally the pessimistic scenario. And then on the top here, this is the data that actually drives the model. And this data originates from the various assumptions. So the first thing you want to do, let's look at the normal scenario, is look at your total available market. In other words, if you were selling a subscription to, let's say, an analytics dashboard, what is the total available market? Then you have a particular niche or segment you're operating in. Perhaps you're just focusing on generalists and you've done your research and believe that you can attain 90% of the market. Next, you want to move back up and enter your starting price. And then you want to enter the yearly growth numbers here for the sales price. Let's say you have a freemium version as well as a premium version. The freemium version could have much less features, for example. And then you have conversions from freemium to premium, and then as well as your churn here. And then I also put in some other revenue here, and this could be from advertising or revenue from affiliates, for example. Okay, so moving on to the cost assumptions here. We have 5 different columns. So the model column is what is actually building the model. We have month, which is the starting month for each of these costs. And then of course we have the different scenarios here. So basically you just start off by entering the starting month for each of these employees, and then you can enter their wages. You can do the same thing for part-time employees. And if you scroll down here, we have some miscellaneous costs, such as bonuses, training costs, cost of living, and then taxes. This is all very straightforward. It's just time consuming. Fortunately, many of the numbers will stay constant as a percentage of the total wages. And scrolling down again, we have the direct expenses, or the cost of goods sold, and then the sales and marketing expenses, as well as some general and administrative expenses. And if we scroll over to the last section, we have the interest rates here for loans and cash in the bank. We have the tax rate, as well as a few balance sheet assumptions. And then we also have the capital expenditures here as well. So let's say in the first year we need $20,000 worth of computer equipment that will depreciate over 5 years, and we'll need the same thing in the next year, and then in 2015 we'll need $50,000 worth of equipment that depreciates over 10 years. Okay, so when you fill this out for the first time, you really want to focus on the market. These are where the big swings will come into play. Where do you think you'll fit in? can you hit those numbers? Don't worry about whether you're going to sell your product for $10 or $15. That's where the scenarios are for. Just focus on a range. For example, use $5 for the pessimistic scenario, $10 for the normal, and then $15 for the optimistic scenario. That information, coupled with an extensive SWOT and market analysis, will help determine how much you can spend, how much funding you need up front, and most importantly, whether your business model is viable. Essentially, we are putting numbers to your business model. Okay, so let's say for whatever reason you entered all these numbers wrong. You can delete all the input cells on a worksheet by pressing Control P. So let me just go ahead and show you how to do that. Control P. So that went ahead and erased everything, so you can go ahead and start over. And this is just really a quick shortcut. You can do this on any of the worksheets. So let me just, I don't want to save that. Go ahead and open this back up. Okay, so that's it for the Assumptions tab. This worksheet accounts for about 80% of the inputs. So rest assured, we will be getting to the analysis part soon. Speaking of which, we'll return to the Assumptions tab when we begin conducting scenario and sensitivity analysis. So moving along, you don't need to enter any inputs for the revenue, employees, or expenses tabs, as the data is calculated from the assumptions. On the funding tab, you do need to enter any notes or loans received, as well as the repayment schedule. And you also need to enter any outside funding, such as seed funding. And finally, on the capital expenditures tab, you will need to enter any equipment that you sold or disposed of. Alright, well that concludes the revenue expense ramp up. Let's now move on to the financial statements themselves. So you want to start with the balance sheet first. And you want to enter the starting balances here. So just to keep this simple, we'll just say that we start off with $500,000 in cash in the bank, which will raise our current assets as well as the equity here. One of the most important things that you need to take note of is that the balance sheet balances. That is, that the assets equal liabilities plus owner's equity. And I have a checksum here at the bottom indicating that it does. Now if, for example, I'd entered only, let's say, $450,000 here, you can see that it'll throw off the entire balance sheet. Okay, let's jump to the income statement. You can see the bottom line here, as well as it broken down by month. And then finally on the cash flow statement, you need to make sure that the final balance here is never negative for both the year and the month. If it is, you will need to find additional funding, raise revenues, and or cut costs, or else you won't be able to pay short-term liabilities, and eventually your long-term liabilities will catch up to you. Okay, so after all the data is entered, you want to go ahead and press Control O on your keyboard to calculate the correct interest expense. So let me just go ahead and do that. So most financial models have to address circular references, which for simplicity is when functions indirectly become dependent on one another. And this can cause problems unless dealt with correctly, which is why we had to recalculate the interest expense. Okay, so next we have the summary tabs. We have the ratio analysis, DuPont analysis, variance analysis, as well as the common size income statement. And we also have some simple charts here at the beginning. So we have our burn rate, we have a revenue breakdown, as well as revenue growth. And then we have an overall summary tab. And this is really meant to be used with your business model when you make pitches to investors. So at this point, there's plenty of analysis you can conduct. So let's look at the profitability ratios. You can see that the net income margin is pretty low here in the beginning years. At this point, you would want to look at other companies in your industry to find the average ratios for comparison. So right now, our employee costs, at least in the beginning, are really high. Do we really need all those employees? Could some of them go part-time? Can we drop wages without losing too much talent? Let's drop some of our employees to see the net effect. So first, I want to take a look at the summary. just take a quick glance at the net income here. So $79,000 in the first year. Let's see how the changes that we make to employees will affect that number. So let's go to assumptions. Let's change this to your month 12, month 15. Just drop this person altogether. Month 20, I'll drop this person altogether too. And now we can take a look at the net effect. We can look at the summary here. We can see that this jumped up over almost 200,000. And then we can look at our ratios again and see this went from about 6% to 22%. So you see how easy that is to tweak? Investors love this. They want to be able to go in and make minor tweaks like this to see how your model responds. This is what's called sensitivity analysis. That is, how does the change of a single variable affect the bottom line? Let's look at another example. Let's look at churn. So let's say that churn is a little bit too high for both the freemium and the premium. Let's just go ahead and drop those down to 2%. And then we can take a look at the net effect here. So we can see that went up only slightly, but it still went up a little bit. And then of course it's easy to check the scenario analysis. You can just scroll up here and change this drop down here, and this is going to affect all three sections of the assumptions tab. So we can change this to optimistic. You can see the numbers change there and here, and then you can change this to pessimistic, and then you can go in and look and see how that affected the net income. Anyhow, you want to continually check your assumptions. And then once you have your base numbers set for each scenario, you can continue to tweak your model with any additional research you uncover. Eventually, you will be able to see if your business is worth investing your time and money in. And remember, things change, especially in the early years. Take these numbers for what they are, projections. As your business progresses, update your model. See where you should be investing time in and where you should try to cut costs. Let this model, which is essentially a mathematical representation of your business strategy, guide you. All right, well, that's it for now. If you have any questions, please email me. Thanks for watching.